All done. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me is Mr. Peter O'Malley. Peter.
Ciaran, how are you doing?
I'm doing pretty good, Peter. It's every week I feel like I say to you, hey, mate, it's been a big week and we're going to talk about all things property. But as we mentioned last episode, we were coming up to the RBA's announcement on interest rates, which, I guess in our circle makes it a pretty significant week. So today's episode, I really want to talk about briefly what the RBA kind of had to say. I don't want to go too deep into their statement, but just touch on what kind of sentiment was there, and then really talk about what their decision means for the property market more broadly, what it's going to mean for our listeners out there who are selling, and what it's going to mean for those listeners that are trying to buy at the moment.
Yeah, thanks, Ciaran. Look, in a blow to mortgage holders more so than home buyers, because home buyers can factor in this rate hike before they make an offer. But in a blow to mortgage holders, the cash rate has gone to 3.85%, which means mortgage rates will roughly now hover in the market somewhere between sort of 5.85 and possibly 6.1%. So, look, it must be said that interest rates and mortgage rates are only returning back to where they were in July. So it's certainly not the end of the world. We're out in the property market today. I think the agency had about 10 or 12 open houses today. All of those were attended. So buyers certainly shrugged it off today. So it's not going to turn the card table upside down with one move. But in reading the RBA statement from Tuesday's meeting, I look for repetitive messages that the RBA really want the public and the money market to take hold of. And it says twice in their statement, the board considers that inflation is likely to remain above target for some time.
Yeah.
So the RBA have assessed that interest rates are not just, inflation is not just spiking here, but it's ingrained in the economy. And we can all debate and speculate on what's really causing that. But the RBA see it as sticky, and this won't be the last rate hike is the reality of it.
So last time there was rate rises, I did ask you about whether or not the RBA in their statement might position themselves to be a little bit more aggressive. And even last week, I asked you whether or not you thought they might go a little harder than 0.25, given that their underlying messaging is pretty consistent, that they think inflation might be embedded, it may stay above target. Why do you think they have opted not to go a little bit harder right now and potentially, ease a series of increases which could be more damaging?
Let's talk about what the RBA target is. First of all, that's 2 to 3% inflation rate.
Correct. And
inflation is, as we know, running at 3.8%. The RBA are capable and have the mettle to impose a 0.5% interest rate hike on the economy if they deem it necessary, and they did 4 times in 2022 and over 2022 and 23. But that's when inflation was above 5%.
Yeah.
So they had to get it down very, very quickly. The RBA is not wanting to jolt the market or the economy here. It's wanting to bring it to heel in a steady fashion, so that the economy is not jerked around. There's no need to hit the economy that hard. It's inflation's higher than they'd like, but it doesn't justify 0.5%. So that was never really on the cards. But I think money markets have it sort of 50-50 as we speak, that there will be another rate hike in March 2026. I think that's on St. Patrick's Day, actually, March 17. That
unfortunate.
Meeting. Yep. So let's hope that St. Patrick says a prayer for all of us and gives us a reprieve, but no promises.
No promises indeed. One of the, interestingly, this week there's been a bit of chaos. You talked about money markets. There's been a bit of chaos globally in the money markets. And I know you and I spoke off air during the week prior to the announcement about whether or not the RBA might actually go ahead with a interest rate rise, given what was going on. Gold markets collapsed, Bitcoin went through the floor, silver collapsed. I mean, markets that were performing incredibly strongly, you could say, quite bullish, had a pretty bad week. Are you surprised that the RBA went ahead and still lifted rates in the midst of this kind of uncertainty in the markets, the money markets more broadly?
Look, by the time the decision of the interest rates for Australia came around, things had sort of settled a bit. Gold had rallied off its bust. So there's clearly manipulation of the gold and silver market going on. Gold crashed after Tuesday and then boomed on Friday.
Yeah.
So that's really volatile at the moment. Bitcoin is now back to where it was 5 years ago during COVID. I've never been a Bitcoin proponent, so I wasn't surprised to see that really getting knocked around. But that's what's happening, and that would hurt many people that are heavily invested in it. That's for sure.
Yeah.
But there's other things going on, like the Indonesian stock market has been absolutely thrashed. We said in our Talking Property segment previewing 2026 that what's going on in Japan is a massive issue with the yen carry trade. So, but look, the reality here, and this is the reality for the Australian government and the Australian people, is that inflation is essentially under control and falling all around the world, except Australia, where it's rising.
Yeah.
And Australia, in the developed world, Australia now has the highest inflation rate. And why is that? It's government spending.
Yeah. Yeah.
So the government are realistically the primary cause, not the sole cause, but the primary cause of why inflation is rising to the degree it is. And clearly, an RBA governor is not going to come out and throw a rock at the treasurer of the country under those conditions. But they would be some pretty direct conversations behind the scenes, and that's what we're seeing now from the Albanese government. And I'm not saying any of this is wrong or right, but the reality is they're pumping a lot of money and support towards the vulnerable members of the community, which is keeping the inflation rate high. So, like if we go back to those minimum wage rises that the Albanese government imposed straight after coming to power in 2022, as we said at the time, it's very hard to argue against the modest increase in the minimum wage to people that are at entry-level earnings. But the reality is it feeds inflation.
Yeah.
So this is the conundrum that the government and the RBA have in front of them is Labor want to support their base, and the more they support the base, that is a contributor to the inflation rate. And the RBA, as you're seeing here, have no tolerance for a rising inflation. So it's interesting times ahead.
Oh, look, it is. I think cost of living is a real issue, as you mentioned, for the vulnerable. I mean, being on minimum wage is challenging to begin with. The cost of everything is expensive at the moment, rent included, which is another major contributor. Before we really just have a look at what the impacts are likely to be for the property market, I just want to get your quick thoughts on how you think this interest rate rise will compare with the equivalent interest rate and therefore equivalent mortgage rate last time that it was this high. Do you think that from a mentality perspective, because we're coming back up off a cut last rate movement, do you think that there is likely to be a little bit more of a challenge for people who in their minds may have been considering that we were on a downward trajectory for some time and all of a sudden we bounce back up? Do you think that psychologically or realistically plays any role or has an impact on people and how they weather this increase?
Oh, look, the early signs are people just took that rate hike, from a market psychology perspective. They took it in their stride.
Yep.
As I said earlier, there was no change in buyer behaviour in the property market. I felt at the start of the year that if there was a rate hike, which I was pretty certain there would be at some stage early, that the market could comfortably handle one rate hike. It'd be okay with two, wouldn't like it. If you start wiping all three cuts from last year off and going up from there, I think
there's trouble.
Well, and I think there will be struggle from that point, Ciaran, because the last time rates were at that level, as we've said, quite honestly, without disclosing anyone's personal circumstances, there's people phoning into real estate offices, tapping the mat, saying, I can't afford to keep this investment property primarily at that stage. Some people were doing the same with their primary residence, sadly. But yeah, so if we saw a cash rate get back to mid fours, which means mortgage rates are mid sixes, that'd be very, very damaging for the Sydney property market. There might be some other markets that can withstand that because they're coming off lower bases, but for the Sydney property, anything. And the reason Sydney's so impacted is everyone in Sydney, well, not everyone, but people maxed out their borrowings when the property market was booming during COVID.
Yeah.
So as rates go above COVID era interest rate levels, those borrowers are already maxed out, if that makes sense.
Yeah. They're above the serviceability threshold.
Correct.
Yeah.
Whereas when you start talking about the Brisbane market, it only really started booming coming out of COVID, and it hadn't actually peaked for 13 years, as we've discussed in the past. So they had a lot of leverage to pay higher mortgage rates based on their earnings, where Sydney-siders on the whole were largely tapped out already.
Yeah, well, I do feel for, and we touched on this recently, but I feel for people that are buying, potentially first homeowners that have taken advantage of this 5%, into the market initiative, have borrowed potentially up to the cap, and then any rise is going to be troublesome. But to put into perspective, I have close friends that live out of Sydney in the regions. And even with interest rate rises, their mortgage payments are less than, I know for a single, studio apartments in Sydney pre-rate rise, which, as you say, means that Sydney is a really unfortunate position that, max borrowings here, it can be quite hard to service. So given that, the rate rise is here, there may be one coming next month, there may be one coming, not long after that if things continue the way they are. And you mentioned that so far this weekend there hasn't been much of a change in terms of the property market in terms of buyer mentality. What do you think the likely flow on is going to be for the market, and how long do you think it'll take before that impact is actually felt?
Well, a rate cut or a rate hike takes about 6 weeks to hit the real economy.
Yep.
So all you could really judge at this point in time about Tuesday's rate hike is market sentiment and market psychology. But about the time the RBA have to make a decision on are we going to hike again or sit back and assess what the last decision's been, the real economy will only be really feeling the impact of having paid out, extra 0.25% on variable home loans, et cetera, et cetera. So we must keep in mind that the last time, Ciaran, this is a subtle point, but not insignificant. The last time interest rates experienced their first hike for the cycle was May 2022.
Yeah.
But a lot of people had fixed their mortgage rates
for up to 4 years at that point. 2,
3, and 4 years. So they had really good notice that rate hikes were coming, and they could adjust. If the plane's heading for the mountain, you can adjust accordingly. Where with this rate hike, it went from the market set for a rate cut on Melbourne Cup Day. The data turned quickly, and I was like, hang on, these are more than likely going to go up from here. Don't worry about going down again. And if you're on a variable home loan, you didn't have much adjustment time.
Yeah,
that's another element to this. For all of those reasons, I think the RBA, and plus the fact that the RBA tend to only respond to quarterly inflation numbers, not monthly.
Yeah,
the RBA will clearly know that the true impact and the full impact of the rate hike will take time to work its way through the economy. I'll be surprised myself if they did increase interest rates on March based on where we're at. I think they'll wait till the April meeting, or it might be May or early May.
Yep.
But they'll wait for the meeting after March to get all the data in.
Yeah, it's certainly an interesting period ahead. Final kind of point then today, Peter. I know it's still quite early in the year, but I wanted to get a sense of, I've talked about the rental market a little bit, but just want to get your take on what you are seeing in the market at the moment, because we've kind of come out of that primarily rush season where, international students come in, there's lots of competition, there's huge, the stuff you see in the paper, there's 1,000 people out the front of an apartment in the city or Marrickville or whatever it might be. I just want to get your take on where the rental market is at the moment, what kind of intensity you are seeing in terms of applicants and volume, and whether or not you are still seeing the kind of tension in the market where potential renters are coming quite aggressively and offering above market rates, etc. Obviously not encouraged to do so, but people do. Whether you're still seeing that intensity or whether things have just calmed a little bit in the market.
Look, it's stable at the moment. There's modest increases there, renegotiations. So the whole notion of queues, down Bondi Road, for a one-bedroom unit, it's not quite that environment that we were seeing 2-3 years ago. But days on other indicators, days on market, availability, tenants clubbing together rather than sort of a couple, taking a 2-bed, 2-bath unit, for example. It now might be a couple taking a 2-bed, 2-bath unit with a friend who's in the spare bedroom. Yeah. So they're offsetting it those ways. So you'd still say that landlords are getting the best of it, but it's not an outright frenzy. That's how I'd describe it at the moment.
And then on that point, final topic, and you don't have to give too much on this, but the Albanese government recently announced roughly $3 billion worth of government sell-offs for primarily military land all over the country. But as an example, in Sydney, they've talked about Victoria Barracks in Paddington potentially being shelved as it is and given to developers. What do you think the government's kind of play here is? Do you think that this is election? To me, it feels like electioneering as a way of saying, hey, we're going to free up all this land, aren't we, doing so much to help the housing crisis? Do you think in reality that it's likely to go that way? And will it actually provide any meaningful volume, I guess? And I say that with the information that last time they tried to clear off some military bases, it got shuttered because community feedback and I think even some internal parliamentary committees looked at it and said this is not viable. Do you think it's likely to happen? And do you think its focus is going to be the affordable housing space, or is this just a bit of electioneering by the government who want to get re-elected?
Look, I think at a non-political level, only in Australia could we sell military bases when we're on the most fraught times that the world has seen.
Yeah.
Could we even contemplate selling military property for housing?
Yeah.
It's so bad it's nearly funny.
I'm surprised he's not selling off Navy ships to have floating accommodation, right?
It's just it kind of beggars belief, but that's not to say that the other side might not have contemplated something similar. I would hope not and think not, but who knows? I know that in government's books, these properties have been underperforming and dormant for a long time, but I think that's the sign of a truly wealthy and healthy economy and country that can have prime property, positioned and in place should the worst happen and things break out. Like,
well, how do you get it back if something does happen? Right, that's the issue, And they're in the locations they're in for strategic reasons. Now, to be fair, most of the bases on the list are not operational in the kind of sense of a vast majority of the other bases, but still, they're strategically positioned to respond to a threat in our major kind of access points, which, it seems odd to me.
It's really odd. I don't, obviously, I'm not privy to all the information, and I haven't read up on it. I've just been watching, the headlines on it and thinking, surely not. Surely we can come up with another solution. There you go.
Surely. Maybe they can 3D print it, mate. Look, really great discussion today, Peter. I think I always enjoy our talks post RBA interest rates, but I also don't because, rate rises are hard for everyone to deal with. But I think it's important, as you say, that we acknowledge that the RBA have made a decision that is proactive and hopefully in a quarter's time we'll have some positive run on the inflation rate. But if not, then we certainly need to be mindful that the market may continue to go from here and the RBA may need to step in again. But as always, I really appreciate you coming in and talking to us about this topic and talking to our listeners today.
My pleasure. Thanks, Ciaran.
Thanks, Peter. And thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.